Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 18th of May. The US dollar continued to collapse yesterday, with the dollar index reaching its lowest level since November, amid heightened uncertainty on the US political front. The recent media reports suggesting that President Trump attempted to interfere with an FBI investigation have weighed significantly on risk sentiment, evident by the surge in safe havens, as well as the dip in global equity markets. We stick to our guns that this market sentiment could continue over the next few days. We base our view on the elevated market scepticism over Trump's ability to push his tax plans through Congress, as well as the fact that there is nothing major on the US economic calendar to distract investors from these political developments until the release of the FOMC minutes next Wednesday. Dollar yen continued to tumble yesterday, falling below the support now turned into resistance of 111.90. The plunge brought the rate back within the medium-term downside channel that has been in place since December. Despite the corrective rebound following the test at 110.50, the fact that we are back within the channel increases the possibilities for the bears to take the reins again soon and perhaps aim for another test near 110.50. For now, though, we stay cautious that the current corrective bounce may target the 111.90 barrier as a resistance this time. Now moving to Australia, overnight jobs data for April showed that the nation enjoyed the second consecutive month of strong employment gains. The unemployment rate unexpectedly declined to 5.7% from 5.9% previously, while the labor force participation rate remained unchanged, beating the consensus for a tick down. Meanwhile, the net change in employment was much higher than anticipated. As a result, the Aussie surged on the release. We think that these encouraging prints are likely to alleviate some of the RBA's concerns regarding the labour market, which, according to its May meeting minutes, the bank was carefully monitoring. Aussie dollar traded higher overnight, breaking above the resistance now turned into support barrier of 0.7445. Although the recovery started on the 11th of May, is possible to continue for a while. As long as the rate continues to trade below the downtrend line taken from the 30th of March, we would treat it as a corrective move. We see the case for sellers to pull the trigger near the crossroad of the aforementioned downtrend line and the 0.75 territory. In order for us to get confident on further upside extensions, we would like to see a decisive close above that crossroad. As for today, during the European day, we get UK retail sales data for April. The forecast is for both the headline and the core figures to have rebounded, following a sharp decline the previous month. This could ease some of the Bank of England's concerns that household consumption appears to be slowing and thus bring the pound under renewed buying interest. From the US, we get the Philly Fed Manufacturing Index for May and initial jobless claims for the week ended on the 12th of the month. We have three speakers on the agenda: ECB President Mario Draghi, ECB Executive Board Member Sabine Laude-Schlager, and Cleveland Fed President Loretta Mester. We think that market participants are likely to focus primarily on Draghi's comments amid elevated speculation that the ECB may appear slightly more optimistic at its upcoming meetings. Any such hints could bring the euro under renewed buying interest. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.